Hello, everyone, and thank you for joining our webinar, Building Your TAM. This is the first of a four-part series all around how to do targeting better. And it starts out today with building your TAM. Then we are going to go into building your first account list and then go to more advanced account list building ideas. And then finally, we're going to end it with advanced segmentation. So with that, I just want to quickly go through a few logistics. We will be taking questions at the end of the webinar. If you just look at your GoToWebinar control panel, you'll find the questions tab. Enter the questions at any time, and we'll address those at the end after the presentation. Also, we are recording this, and we will be sending out a replay to the recording for you to watch, or if anyone missed it, you can send it to them and they can watch as well. And with that, we'll start into the webinar. Just before I hand it over, I'd like to give slight background. So as I was thinking and the team here was thinking about this target webinar series, of course, you know, the starting place seemed to be how to build out your TAM. I think that's something that even advanced ABM organizations maybe not struggle with, but sometimes have different definitions and can be a bit confusing. I was lucky enough to be on a webinar with Sarah and Rennie a few months back where they were going over a more broad scope of their ABM program. But one of the things that really stuck out while we were planning it and during it was their explanation for TAM. I thought it was one of the more clear and understandable ones, and certainly one of the better stories of how someone did it and giving good advice to those of us who are trying to either do it for the first time or get better at it. And so instantly they came to mind as we were thinking about this, and I can't think of anyone better that could help explain to the rest of us about building their TAM. So without any further ado, I'll turn it over to Sarah.
Hi, everyone. I'm McGlinchey, Marketing Manager of Acquisition here at Optymyze. And I've actually been doing ABM now for about almost 5 years. And I love ABM. I love all things ABM. This was my first experience doing TAM, so I'm really happy to speak about it. And I hope you can learn some things from Rennie and myself today.
Hello, everyone. My name is Rennie Fidlon. I am the VP of Marketing here at Optymyze, and I've been a pioneer in ABM. I've been doing it for about a decade or so, and I am thrilled to be here as part of the Total Addressable Market segmentation series at Terminus. So first, let me tell you a little bit about Optymyze. Optymyze is a sales operations solutions provider for large enterprises. And the core of sales operations is really not CRM or even SFA, Salesforce automation. The core of sales operations is really sales compensation. When done well, sales compensation incentivizes the right behaviors from your sales team and ensures alignment to your corporate goals. Optymyze offers the expertise and the enabling technology in a unified solution to empower sales leadership to plan more strategically and to enable salespeople to sell more effectively.
So a little bit about the benefits of Optymyze. Optymyze, as Rennie mentioned, works in the space of sales operations management. And some of the benefits of sales operations management include increased efficiency and accuracy. So you can pay your reps faster, you can reduce over/under payments. You can also increase productivity by automating business processes. And a solution like Optymyze allows your company to align sales compensation with its corporate goals. And in doing so, in achieving this alignment, you incentivize the right behaviors from sales. You can also benefit from building trust with your sales team, which produces increased transparency and allows you to maintain compliance through an audit trail. And additionally, you can gain greater insights with global data management, which then leads to advanced analytics and better decision making.
So Optymyze is a leader in sales operations management and serves some of the most recognized brands across a wide variety of industries. But enough about Optymyze. Let's talk about building your TAM, or your Total Addressable Market. I'm going to start with some definitions. To me, the Total Addressable Market is the universe of accounts that you could sell to. It really speaks to fit. Your total addressable market is derived from your ideal customer profile, and it includes a combination of industries, geography, and really any other discoverable account metric that will help you zero in on the types of accounts that would be a good fit for your solution or solutions. A little pro tip for you: be as inclusive as possible. I'll explain why in a little bit. Now, your TAM is different from your target account list. Your target account list is the list of accounts that you want to sell to. This will vary depending on your corporate goals. Are you looking to increase market share? Are you looking to increase lifetime customer value? Are you looking to bag a whale for promotional purposes? Do you want to be opportunistic due to market changes? Developing a target account list should be done in close partnership with sales and sales management, with an eye to achieving those corporate goals as set out by your executive team. Again, pro tip for you: your TAM should remain relatively stable while your target account list will change. This becomes extremely important, and I'll explain why when we get to measurement.
So let's talk a little bit about how we built our TAM here at Optymyze. So at Optymyze, we defined an account that we could sell to, which would be part of our TAM, as within 8 industries in North America, EMEA, and certain countries in the APAC region, and having 250 or more salespeople. So to find these accounts, there are a lot of different sources you could use for data, but we specifically wanted data that told us how many people were currently working within a specific function of a company. So we used LinkedIn Sales Navigator because it offered us the ability to see that information. So a little bit about how we went on to segment the TAM once we pulled it from LinkedIn Sales Navigator. So we segmented our TAM into A, B, and C accounts. So what this means is A accounts are those accounts that have 1,000 salespeople or more. So they're an A, they're a top priority based on that criteria. B and C accounts are those accounts that have sales departments of 250 to 999 salespeople. B accounts also have a growing sales department, while C accounts have a shrinking sales department. And again, I just want to offer this pro tip here that your TAM really shouldn't change much. So we have the TAM, we segmented it into A, B, and C, and after that, it really didn't change much. Some additional ways, though, that you could segment your TAM once you have it. We here at Optymyze used firmographic attributes like industry, location, some demographic segments such as functional area and level. But what these allow you to do is deliver customized messaging. So you could also look at behavioral segments such as demonstrated interest or product category. Something else we tried here at Optymyze, we segmented by purchase intent, and we also segmented by opportunity stage of the account. So there are a lot of ways that you can segment your account, and it again allows you to customize your messaging.
We then set out to put our TAM everywhere. This is why it is so important to be as inclusive as possible. We developed our books of business out of our TAM and put them into our CRM. These are the accounts that we assign them out to each of our salespeople within their book. This ensured marketing and sales alignment. We also put our TAM into all of our account-based advertising platforms like Terminus and our content syndication platforms. And we even added it to our analytics platforms to measure against. And
something that really helps with sales and marketing alignment is socializing your TAM. So you have to get people comfortable with your TAM. But you need to start with marketing. So marketing is the owner of TAM. And then you proactively share the TAM with sales. Collaborate with sales leadership, assign accounts, such as in books of business, as Rennie mentioned, and only source those accounts and segment them by books of business from the TAM. Review your TAM criteria with sales. Draw a firm line in the sand so that if an account is not in TAM, it does not meet the criteria, and therefore it should not receive any sales and marketing activity. I do want to point out, though, that it would be nearly impossible for TAM to include every account that your company could ever want to sell to. So in an event that an account that is not in TAM, but it meets the criteria, I encourage you to implement a new account creation process, which we did here at Optymyze. So really, you want to train sales on the process of qualifying accounts if they have an account that comes in that's not from the TAM, whether it be from some outside efforts. And we really wanted here at Optymyze to make sure that sales was comfortable at least evaluating to see if it fit the criteria, so knowing what to look for, but then going to marketing. And actually, as I have here, I want to mention that I have a pro tip for having marketing create any new account. So that way marketing maintains ownership of the account. And then I just wanted to point out that this chart here is actually how we explained marketing in partnership with the operations department here at Optymyze, explained how we arrived at our target account lists. So we showed how we started with our all accounts, then we moved to our total addressable market, or our TAM, and then we moved to a target account list. So giving them a visual like this really helped them to understand why we were marketing to the accounts we were marketing to, and why they were assigned the accounts they were assigned as books of business, and thus reinforce that sales and marketing alignment.
So, measurement. I'm a data guy. I love looking at data and making my decisions based on the data. And when I started doing ABM, I had a difficult time showing success because a lot of the activities that you do for ABM, especially around the advertising, are not directly attributable. People are not, the effect of ABM, the benefits of ABM is much, much larger than the display ad that one person clicks on and what they do after that. And I've run many, many tests using different audience segments to prove this out. But I needed some metrics to go along with my ABM campaigns to show success. And so I came up with two overall metrics that I think are much better indicators of overall brand health and account-based marketing effectiveness. The first one is what I call brand reach. And brand reach is calculated as the percent of total addressable market accounts, the percent of your TAM that is visiting your website over a rolling 90-day period. This is a very effective way to look at how many of your accounts you are influencing and to constantly evaluate the success of your overall ABM program. But just the number of accounts visiting is not going to be enough, right? You also want to see how well you are penetrating those accounts. And so the second metric I look at is account penetration. And account penetration for me is the average number of users of each account in my TAM that is visiting my website, again, over that same rolling 90-day period. This would be nearly impossible to calculate either of these metrics without a stable denominator or a stable TAM. You wouldn't have that denominator for the brand reach, and you wouldn't have the number of accounts that you need, a stable number of accounts, in order to figure out account penetration.
So though your account, your total addressable market should be relatively stable, as Rennie mentioned, I do recommend reviewing your TAM annually. So you want to review your fit criteria and confirm that it is still current. A good exercise to achieve this is to run a report of all accounts that were created after your TAM was implemented. So make a note of when it was implemented and when you put TAM everywhere, as Rennie mentioned, and then look at what percentage of your TAM are the accounts that were created. So if there were new accounts that were created that didn't meet your TAM criteria, I actually look at like 10%. So if the new accounts that were created make up 10% of your current TAM. So meaning you created an account, it was after the TAM was implemented, but you added it to the TAM. Consider what criteria these accounts had that made them a fit for TAM that you didn't include them initially. And maybe, some of your fit criteria has changed. So ask yourself, are these accounts of an industry that was previously excluded? Consider your current business objectives. Think about, has your product offering changed? Have you released a new product? Have you had to comply with new or revised industry standards that would exclude or include accounts in your TAM? So just annually ask yourself some questions about your fit criteria and make sure that the new accounts that are being added to your TAM after they were implemented, because it's impossible to include every single account that you could ever market to, but just make sure that give yourself a threshold of about 10%. And if it's 10% or more, maybe review your fit criteria and see if it's worth doing another exercise for TAM.
Or your data source for that matter, right?
Yeah, so that too, yeah. I mean, hopefully there'll be another way we can get the number of salespeople for our fit criteria, but it's worth looking for. Yeah. Some additional benefits of TAM. So the TAM exercise, really, I see a lot of different benefits, but the first one is that it forces a data cleanse. So your CRM, your marketing automation systems, it creates an opportunity for a data cleanse within those systems. What accounts do we have in there? How many of them are part of TAM? It kind of forces you to create some structure of accounts within those systems. And then it also ensures that there's a collaborative environment between marketing and sales. So I kind of see it here as we function as one revenue team because we're focused on the same accounts and we have a mutual understanding of the ideal customer. And so if we're working on the same accounts and we have this regular feedback loop about what's working and what's not, when deals close, we can celebrate wins together, and it really fosters a team environment.
So some key takeaways for you. First one is that, as I stated, the TAM is very different from a target account list, and you have to be very careful not to get the two confused. Again, the TAM is all the accounts you could sell to, while your target account list is all the accounts you want to sell to. Your TAM should remain relatively stable from quarter to quarter, year to year. There will most likely be some updates needed, but it should be fairly consistent. When developing your TAM, remember, be as inclusive as possible. No sales or marketing efforts will be made on accounts outside of your TAM, so you want to be as confident as possible that no one is left out. And having your TAM will allow you to generate ABM-specific metrics that are much better indicators of overall brand health, because it allows you to focus that measurement on only those accounts that can buy from you. And finally, creating a TAM also fosters it aligns sales and marketing. It fosters that collaborative environment that Sarah was talking about, because both teams are focused on the exact same accounts with the exact same goal of driving revenue. Thank you. And do we have any questions that have come in?
We are starting to get some questions, and a quick reminder to please add your questions if you have any. I'm going to be a little selfish and ask a question that was on my mind.
Sure.
We're currently, as part of this whole month or two of focusing on targeting, writing an ebook about targeting. It really makes me appreciate how concisely you can tell this story, because you can imagine how we would go around in circles with different folks between the difference between TAM, ICP, and other things. There's a lot of different definitions out there. So in that vein, what do you see the relation between TAM and ICP?
So your ideal customer profile is going to be too restrictive, if you will. There are reasons why a customer may be ideal for you. That it doesn't mean that it's a customer that isn't only about a customer and if they could buy from you. So if you think about whether your solution is a good fit for a company, it can be a good fit, but they may not be the right customer for you. They may cost too much in onboarding. And so the lifetime value of that customer is much lower. They may not be a good upsell opportunity, or may not, may be more likely to fail on onboarding and thus not renew in a year. With most SaaS products, for example, the first year that you have that customer on board, usually you're not making any money, right? You usually don't start seeing any actual profit from a customer until years 2 and 3. Well, if that's the case, you have to make sure that the customers that you are bringing in are likely to renew in year 2 and 3. That speaks more to your ideal customer profile, where it talks about what it is, what aspects of a customer are you looking for that make them ideal for your customer, not just a fit, but an ideal fit, right? And so that's why it differs from you want to base your TAM on what you're looking for ideally, but you want to be more inclusive in your TAM.
Gotcha. And one other one, and then I'll start looking at the questions. You talked about, you can't possibly know every account that's in your TAM. When those new accounts raise their hands, that you have a process. Can you drill a little bit more into that process? I mean, I know for us, there was a point that we were a little too religious about ABM, and we were ignoring what was coming on, or not ignoring, but we weren't as supportive as we should have been with inbound, and we probably lost a lot of opportunity that way. I think that's something that a lot of people may be trying to figure out is, how do I mesh this inbound thing with this ABM thing? It sounds like you've got kind of a tight process around there. When an account raises their hand, do you then have a process that you check them against your fit criteria and decide and then what happens once you decide they are fit?
So when we decide they are a fit, we work with the operations team to add them to the TAM, and then so they're added to CRM, which in turn makes them added to Marketo. They're added to a book of business, but usually there's like some weird loophole. Like I can give an example. We target insurance as one of the industries that would be a fit, but insurance sometimes it's a fault of the system that you're using to pull your TAM. So like our TAM, as I mentioned, was pulled from LinkedIn Sales Navigator. LinkedIn insurance, insurance agents operate individually. So the whole company, would have, according to LinkedIn, a very small amount of sales agents tied to their company headquarters. So they would be reporting a low number of salespeople. So we would have missed them in using the system we did for TAM. So my point of bringing that up is we've known that there are certain flags to look for. So, an inbound lead comes in, it's from an account that's not in TAM. We check it. We find out it's an insurance, the industry's insurance. Okay, they should be in TAM. We add them. It's a small amount still compared to the overall number of accounts in TAM. But the process would be the inbound lead comes in. Usually it's through like a form fill, and marketing is notified, and then marketing notifies sales, and then sales and marketing work with operations. Basically, somebody needs to review the criteria, and it's already been socialized with sales. So sales should have already been reviewing the criteria. They work with the operations team to report back, basically determine that it's a good fit, and then marketing adds it with operations to the system.
Yeah, I mean, just to speak on that a little bit further, every inbound lead gets followed up on. So we have we call them SDRs, sales development representatives, is similar to a BDR or inside sales. And they will do the follow-up, and they will ask some qualifying questions, because we know that data is not 100% accurate. Right. We see that all the time with, especially LinkedIn is a good source, but it's not 100% accurate. I mean, they over or under report on the size of a sales team all the time based on, random, how companies title their staff. Right. And they try and take those titles and interpret it into a functional area. So, our SDRs will follow up on every inbound lead. They will, ask qualifying questions to see if they fit within our TAM. And if they do, then we'll create that account and assign it out to a book based on industry and region.
Gotcha. We have a couple questions here. So the first one is, do you create all your TAM accounts in your CRM, even if some of them are not assigned to a sales rep yet?
Yeah.
Or are all accounts assigned?
Well, every account is assigned to a book of business. Not every book of business is necessarily assigned to a sales rep at any given point. Salespeople move on. There's turnover. It takes time to hire new ones, et cetera, et cetera. So there are some gaps to whether or not the book is assigned to a salesperson, but every TAM account is assigned to a book of business.
And then, were you referring to the percent account penetration specific to the TAM list, average users versus account level prospects / customers?
Yeah, so both brand reach and account penetration are specific to our total addressable market. So, if you think about it, if account A has 10 users, unique users coming to your website in that 90-day period, and account B has 20, right? And you have 2 accounts in your TAM, your average number of users going there will be 15. So that's, take that out to about 3,500 accounts in our TAM. And, it's not an easy metric to calculate, but you can get unique users in Google Analytics, and we utilize that to do our account penetration.
All right. Well, with that, I think we wrap up here. I just want to personally thank the audience for joining us. I know everyone's busy, and appreciate you taking a little time out of your day. Sarah and Rennie, as always, I really appreciate having you on here. It's always valuable. I always learn something, so I hope everyone else in the audience learned something as well. And with that, we'll end the webinar. Thank you so much.
Thank you.
Thank you.
Thank you.